to Lesson 8, part of Objective 2, the business environment in which retail businesses operate. This lesson is about the effects of changes in tax, and if you see Eduardo, click for help. Well, let's go through the steps for this lesson. First of all, the knowledge step is to know how tax impacts on disposable income. Then we're looking at how changes in the different taxes impact on retailers and consumers, and then we're going to look at specific increases on specific taxes and how each of those change the behaviour of consumers and retailers. The vocabulary to focus on for this lesson: the VAT, value added tax, income tax, disposable income and corporation tax. Now, most of these are progressive taxes. Those are the taxes that are linked to earnings, and disposable income is the one where it's all to do with the consumer. This is very much a consumer phrase, and it's what they have left to spend, usually in retail, after they have paid their taxes. So you'll know you've completed the lesson when you have got a statement about disposable income and the changes tax causes, that you can describe how retailers and consumers are affected by these tax changes, and then being able to name specific taxes and how that influences their behaviour. The roles at the bottom are specific to tax. We've got tax compliance officer, corporate tax manager and private business tax manager. Here's your work list for lesson 8. There are 7 questions. There are 7 single questions going from an income tax decrease, VAT rise, retailer's reaction, VAT at 25%, that's a what if, and then we're looking at income tax allowance, business rates increase and the corporation tax decrease. So we've got ups and downs going on with taxes as well. Effects of changes in tax. The government can change its policy on taxation each year. It can raise taxes to increase the amount of money it receives to spend on the NHS, schools, etc. Or it can decide to reduce taxes to encourage more spending in the economy. Increasing or decreasing taxes will influence the level of consumer spending and will have an impact on most retail businesses. For example, if the government chose to lower the level of income tax, this will boost consumer spending as consumers' disposable income will rise. On the other hand, a rise in VAT will have the opposite effect and reduce demand for goods and services as they become more expensive. Question 1. What will be the impact on consumers if income tax is lowered? Is it positive or negative, and why? So if income tax is lowered, how does that affect their disposable income? So if we look, if we've got lower tax, that means they've got a lower income tax bill, which means their disposable income will be slightly better off. So whether is that a higher word we want, and what will the impact be on consumers? What are they likely to go out and go and do? Question 2. If there's a rise in VAT, retailers usually react by changing their prices. Remember, this is a regressive tax, it's an indirect tax, it's not linked to earnings. So what will be the impact on consumers? So here, the VAT has risen. As it's a regressive tax, then retailers tend to pass that on to consumers, so prices will go up. What will consumers tend to do if the prices go up? Retailers' reactions. Retail businesses will try to pass increases in tax on to their customers if they can, but this will depend upon the degree of competition they face. If they do this, there is always a risk that consumers will stop buying from them and shop elsewhere. Increased rates of corporation tax or business rates will increase the cost of businesses. National insurance, paid by employers and employees, is sometimes described as a tax on jobs, as increases in this tax increase the costs of employing workers, so a retailer may decide to reduce its number of employees. Question 3. Describe the impact of, we've got an increase in corporation tax. Corporation tax is the tax on a company's profits. So what would be the impact on retailers if their profits they've got an increase in the amount they've got to pay from their profits towards corporation tax? Then most retailers are going to want to increase sales, or maybe they have to increase prices. So if they do that, then what would be the link to the impact on consumers if they see things change on prices? First one. Second one, an increase in business rates. Now this is the tax on physical properties. So if that's where the retailer operates from, it doesn't affect any online businesses. So if there's an increase in business rates, there's an impact on retailers, but quite specific retailers, which you need to write in your answer. And because of that specific type of retailer, then consumers have the ability to choose an alternative type of retail outlet in order to complete and make their purchases. Let's make sure you've got that difference, because remember, business rate is that tax on physical properties. An increase in national insurance tax. Now this is the one that's a tax on earnings. So but remember, it's employers and employees have to pay it, because the employers actually make a contribution as well. So if there's an increase on national insurance, then the employer has to have their contribution increased, as well as the employee. And if the increase is significant, then can they afford to keep all the workers? This is the last point we were looking at. So that's what's going to happen to retailers. And if there's such job insecurity, then how are consumers going to feel about spending? Question 4. The government increases VAT from 20% to 25%. Your job is to calculate the new prices. So you've got £7.50 t-shirt. So first of all, you need to calculate 20% of £7.50, add the two together, and that gives you your new price. The second part is 25% of £7.50. You add the two together, and then you've got your second price. Then you can look at the difference in prices, and that's what retailers would tend to do. Then you've got your second product, a laptop at £500. Calculate 20% of £500, add the two together, there's your answer. 25% of £500, and then add the two together, there's your second price. So in a calculator, you would write down 500 multiplied by 20, press the percent sign, and then equals. And that will give you just a percentage, so don't forget to add it to the original price as well. And the third product is a car at £15,000. You need to find 20% of £15,000, add the two together, you have your first price. Then 25%, add the two together, add the 25% to the original 15,000, and you've got your second price. There you'll start to see what's going on with VAT prices and what retailers feel that they're forced to do should there be an increase. Task 5. The government increases the personal allowance on income tax from £12,500 to £13,500. How will this impact on consumers' disposable income? First of all then, let's find out the current percentage rate of income tax for earnings up to £12,500. So you need to go and do some revision and go and check on that lesson, which is lesson 3 on objective 2, and then you'll find the percentage rate. Second part, the second table. Consumers can now earn £13,500 at the same rate of income tax. So they can now earn more money and be charged the same percentage rate for income tax. What happens to their disposable income? What happens to the amount of income they have once they've paid all their bills? Do they have more or less money? How might this impact on retailers? If they have more or less money, then obviously it's going to influence their spending behaviour, what they can spend in retail. So what are they likely to do? Your answer's in the second table. Question 6. The government decides to increase business rates. How will this affect retail businesses? How might they respond? First of all, let's remind ourselves what business rates are a tax on. So to revise that, you need to go to lesson 7, that's actually the last lesson, just to remember what business rates are taxed on. And write your answer in the first box. The second box, an increase in business rates. So we know what it is. You need to go back and revise this one. Not giving it away on this question. So now you actually talk about the effect it has on retailers. So if they've got a higher rate on tax for business rates, then these are part of their expenses, their bills. So how is this going to affect retailers? Is it going to affect their profit? Is it going to affect their employees? Or is it going to affect the amount they've got to pay their employees, the wages? Second point, how might retailers respond? So there's business rates. If we're looking at an increase, we're looking at an increase in the tax bill, what might retailers do? And the second point, how might this impact on consumers? If retailers pass on the cost, what are they going to do? What are consumers going to do? If retailers go, nope, I'm keeping the price as it is because I'm worried about competition, what might consumers do? So you've got 2 parts of the answer there to complete. Question 7, your final task. Corporation tax is reduced to 15%. How will this affect retail businesses? Corporation tax is a tax on a company's what? Make sure you fill in the first part, then that dark purple at the top. Current corporation tax rate is what? So you need to find out the current amount, and that was part of one of the previous lessons. That was part of lesson 6, there we go, to remind you which one it was. And you need that rate to understand just how much a reduction has happened. Corporation tax is a direct or indirect tax. Is corporation tax linked to earnings? Is it linked to the company's earnings? This isn't about an individual now. Okay, second table. This is where we're actually dealing with the 15%. What would happen to the retailer's profit if corporation tax is reduced? So if they've got a reduction in the tax bill, what's going on with profit? What might retailers do to their prices? Would they reduce them? Would they keep them the same? Would they increase them? Think about what tends to happen. So do consumers actually benefit from a decrease in this particular tax? So there's a thought for you, and it's your opinion that can go in the last question. There you go, you have completed the 7 questions for Tax Changes Lesson 8. Well done, way!